Hey, what's up? Colin from the Investor Channel. Going to walk you through some analysis of Lending Club, ticker symbol LC. Now, Lending Club has been on a wild ride recently. When they recorded their earnings this week, it was discovered that their CEO and founder was booted because the board discovered that he was investing in a product that originated from Lending Club and was sold to a larger bank. And apparently that is a no-no. That also prompted some banks that I believe also buy notes from Lending Club, and we'll find out what percentage of business that is for Lending Club once we get into the financials here in a little bit. But that could certainly shake up some of Lending Club business. Let's take a look at the chart, and we can see kind of almost from day one, Lending Club has kind of been in this downtrend, and certainly we've seen it fall off a cliff a little bit recently here. The stock trades at $3.51, which is approximately a $1.3 billion valuation. And I urge you, if you're new to trading stocks or you're relatively new, maybe it's something you're getting into more seriously now or in the last couple months, focus more on the valuation. So the stock price is one thing, but as you'll learn, especially these early stage companies like Lending Club, they're issuing shares of stock all the time. Some companies obviously way more than others. Lending Club has plenty of cash on the balance sheet. They're issuing stock typically only for either acquisition purposes and more specifically to compensate the executives and employees. But the key thing is Lending Club as a company is worth roughly $1.3 billion. And I say roughly because if you want to buy the whole thing, you're going to have to pay up a little more than that. But the most important thing now is we're going to walk you through some of the financials in Lending Club. Now, it was actually put out in a press release that they weren't going to file their most recently quarterly report on time, and that's likely due to the management shakeup and some irregularities there. I don't think it's that big of a deal. I certainly don't blame you for maybe holding off investing in Lending Club until you see that report and see any kind of irregularities there might be on there. But they issued a Form 8K, which is almost identical to a 10Q, just maybe a little less wordy, and it gives a nice summary. Sometimes I like just going through the 8K when I just want to see the numbers and kind of the high-level information. Typically, when you've analyzed a company over and over and over, going to the 8K, which is a current report, and they're often issued a little bit more frequently for some companies, and so it's a nice thing to kind of look at if there's not a recent 10Q, or in Lending Club's case, they're late in filing it. So this 8K is dated May 6th, and we'll just jump right into the numbers because Lending Club's business is really clean. It is based around originations, and so they originate these loans on their platform, and so these are the loans that people are requesting, and the investors on the site that are investing in usually $25 at a time, sometimes more, but usually $25 at a time. We've noticed these figures are in millions, so they're actually very impressive. Quarter over quarter, the company grew 68%, to 2.7 billion. That's with a B. Origination. So operating revenue was, I believe that's 151 million. That grew fairly impressively at 87%. Adjusted EBITDA. Now, depending on the company, you can either pay attention to this number or you don't have to pay attention to the number. Likely the biggest expense probably this cuts out is some kind of non-cash stock-based compensation, but you can almost put non-cash in air quotes because they'd have to pay these executives with either cash or stock. So you choose You pick your poison. Obviously, stock doesn't take cash out of the balance sheet, but it dilutes all the existing shareholders. Net income. Now, this is the number I look for every company. Every single company I look at, I don't care who it is, I look for GAAP net income because it's just a nice figure that you can broadly compare to for all companies. And we notice in the quarter, net income was $4.1 million, which it beats last quarter, which they lost $6.4 million. So really nice quarter if you believe that Lending Club's business is going to continue to scale up in this fashion. This is a very positive sign here, this net income of $4 million in the quarter. As we move further through the 8K, we'll get to a little bit more financials on this consolidated statements of operation. We see a breakdown of the operating revenue. We'll see it consists of transaction fees, they have these servicing fees, they have management fees, and there's this other revenue line, which actually grew quite a bit. And they might actually tell you what other revenue consists of, but if they don't tell you in this 8K, that's something you can either find in the 10Q if it's in there. If it's not in there, go look in the annual report, so the 10K, and typically they break all this stuff out for you and they tell you specifically what it is. But on a high level, we notice that total operating revenues are growing extremely quickly. Again, these are just revenue. These are revenues that Lending Club is taking in. So these are not the origination. So they're generating over $150 million in revenue in the quarter. And so that's quite impressive, since the previous quarter was in the prior year was $80 million. So they're growing at a very nice rate year over year. Now we see their operating expenses. And what I notice about this, now they've grown obviously in line with the operating revenues. So, however, they've kind of grown within proportion with that. And so that's what you kind of like to see with these businesses, especially like a platform business that needs to keep scaling up. Eventually it'll hit its plateau, and you hope it just kind of like hovers on that plateau for a while, and hopefully consistently hits that plateau, and Lending Club can kind of keep its operating expenses in check. Then it should be spitting off some nice cash, because they shouldn't have to invest a ton of money. The platform could kind of be it should be generating revenues. They'll need to market a little bit and keep updating it and do updates and security and things like that. However, the hard work, and I say this kind of tongue in cheek, but the hard work is somewhat behind Lending Club. Now it's just a matter of continuing the growth rates. We notice sales and marketing ticks up. Obviously, origination and servicing ticks up, but not a ton in relation to revenue. Almost doubling. Operation and servicing didn't tick up that much. So that's scaling up nicely. We see engineering and product development. That's again scaling up nicely. They probably don't have to do as much of that as time goes on. And other and general administration, we see that tick up again, not at an accelerating rate. And so that's kind of nice to see if you buy into the model continuing to grow and these operating expenses kind of, staying, I don't want to say staying low, but staying in check is exactly what you want to see. Coming down to kind of the bottom line, essentially, is net income, and you notice $4.1 million of net income as opposed to a loss of 6.3 the year before. So, hey, progress certainly going on at Lending Club. Moving down to the bottom of the 8K, there's this operating and financial highlights. What this does is kind of gives you a breakdown of kind of the loan originations. And what I wanted to highlight was one of the pieces of news, and obviously surrounding Lending Club, is the CEO got busted for buying a packaged product essentially from a bank. And that was a no-no. And so these other banks, these other community banks that were also buying Lending Club, these other banks and financing companies were buying Lending Club notes, likely in kind of bulk purchases, like in big chunks. And this, as we see here on standard program origination by investor type. So Lending Club actually breaks this out and shows you we have managed accounts individuals. So that's likely people like you and me. We have self-managed individuals. Managed accounts. These are people, I believe it was a minimum deposit of like $2,500. These are people that deposit an amount on Lending Club, and then Lending Club kind of automatically invest in notes for them. Self-managed is individuals, is someone like me. I actually self-manage my Lending Club account, and then there's banks and financing companies, and then there's this other institutional investors, which are typically probably like hedge fund guys, big rich guys. So the point is, we notice this bank and financing companies, this has grown from 17% last year all the way to 34%, to where now it's the biggest portion of originations coming from Lending Club. Now, part of that might have been some of this stuff that the CEO was doing, but these banks now being on the fence about this, Lending Club notes certainly could put a hiccup in this business, at least for a quarter or two. So going through the rest of the financials, they're pretty standard, but it definitely shows that Lending Club is fairly healthy. They have a decent amount of cash on the bank. They're not really burning through a ton of that cash at all, really, necessarily, quarter over quarter and year over year. So that's not a risk. It's really all about the Lending Club business model at the moment. So I guess the elephant in the room, or kind of the question you're asking now, is should you buy Lending Club shares at the moment? And it all depends. I don't want to take the easy road out, but I think it kind of depends on your risk tolerance, where you're at in life, what kind of portfolio you're trying to build. I will say this, Lending Club is still valued at $1.3 billion. And if their growth rate just starts to plateau or even decelerates just a little bit, I believe that valuation is still very rich. I think you'll see a day where Lending Club's shares will trade under that $1 billion valuation. And then for me personally, I might be interested then at that point in looking into buying Lending Club shares. The other point in time I'll be looking to buy Lending Club shares is likely down the road when the model kind of matures, when there's not these risks of the CEO doing something silly and maybe banks and other institutions wondering what they want to do with these loans, if they want to invest in them, if they don't want to invest in them. Maybe other competitors start to pop up, maybe even like much larger banks like Wells Fargo or Bank of America or PayPal or or Visa, MasterCard, any of these companies that are billions and billions of dollar companies, could start this same kind of platform. Imagine if like Facebook wanted to get into this. So for me, there's a lot of risk. Again, I don't know how much reward there is also with something like Lending Club. I believe there's reward. The shares can certainly appreciate if they continue on this growth rate. They keep the operating expenses in check. They start generating net income. Sure, there's upsides to the shares. However, I think you're going to be able to telegraph a lot of that upside with a company like Lending Club. Again, this is not a company like Apple, which can come out with maybe like a self-driving car we've never seen before, or a product that could revolutionize or kind of, change the paradigm around Apple shares. And that, I'm just bringing Apple up as an example. That you could name any drug manufacturer or any kind of innovative company. Lending Club's platform, while it is innovative, at this point you can kind of predict the kind of revenue streams based on the kind of demand there might be for the loans. Again, their service fee is essentially 1% or roughly around that amount. So their business model relies on originations coming through the door and investors buying that. And any disruption in that, and you certainly could see growth rates not accelerate to the point that they have in recent history for LendingClub. So that, for me, that makes it a risky investment. Certainly, if you want to put your toe in the water, I would inch into shares over time. If you're only, and I don't want to, I'm not insulting you. If you're only trying to buy 10 shares or 50 shares or 100 shares of LendingClub, which would cost you about $300 plus commission fees, you can buy at that level. I know that might be a lot of money to you, but at that level, I don't think you're going to get hurt too bad. And at the same time, you're not going to get rich and retire at that level. But if you're trying to invest thousands and maybe even tens of thousands of dollars into this company, I know I'd want to do that over time. So if you really want to jump the gun and wait until and get in, again, sometimes this is some of the best times to buy stock when there's all this turmoil and uncertainty and the stock has been in free fall. That's sometimes one of the greatest times to buy, but it's also very risky as well. LendingClub is still richly valued at $1.3 billion. This is a company that net income was $4 million. So I don't even want to know what that is on a ratio there, but it's a lot. It's a huge number. So if LendingClub doesn't continue to grow and grow and grow and grow, this $1.3 billion valuation is just going to seem bigger and bigger and more rich. So in that case, I'd inch into shares. That would be my best advice. Please read the disclosures in the comments or in the description of this video and that are showing on the screen now. Thanks to the viewer that suggested I go over this company. I really appreciate it. Anyone else that wants me to go over a company can certainly leave a suggestion in the comments below. Please subscribe and check out my other videos if you found this entertaining. And please, if you have an opposing view or you agree with me or not, you're more than welcome to leave a comment below. I'd love to have a discussion with you all about this. Thanks for watching.